Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at SPY on the daily, weekly, shorter term time frames. Big gap and trap day today, almost a red Marabozu. We have a little bit of an upper wick and a lower wick, so not the exact definition, but the point being the bears absolutely controlled today. We're on the verge of this bullish MACD cross, flipping right back to bearish. RSI is rejecting from 50, and we are close to a bearish break. Not quite there yet. We have support here of 212.76 and 212.93. And this candlestick right now is factoring in some after hours action with the bearish reaction to Amazon. We have some bearish earnings, and we're going to see if that's going to weigh on the market tomorrow. I anticipate it likely will. So we're looking down at that key support, 212.76, and if we break that level tomorrow, we're going to be heading into next week very weak, looking at the lows of September and October as our only close support levels. SPX cash level, looking at this weekly chart, I keep pointing it out, as long as the 10-week moving average is resistance on SPX, I have a bearish lean on the markets. Watching those rejections over the past month, watching the back test and rejection the past 2 weeks from the middle Bollinger Band shows weakness. So the bears are in control of the short term, in my opinion, and we could be on our way to test the lows of September and October from just a couple weeks ago down at 2114.72. So the action today on the 5-minute time frame, we saw a bullish pre-market move, very strong. Look at the volume behind that move, and that's all it takes to move the price pre-market, as there is a lot less in terms of market makers and orders to get through. So the bulls took it up on tiny volume pre-market, and then the bears absolutely dumped it on huge volume right out of the gate. So what stood out is the increase in bearish volume from the first candlestick to the second. And if you're a person who doesn't like trading in the first 15 minutes, that's completely fine. Wait for things to settle down. There was an opportunity right here. This is a bear flag. Look at the volume behind that bull bounce. Nothing. Little short-term bounce followed by a 25-minute dump. So even if you didn't get in the first 20-minute dump, there's your little bear entry opportunity. Further downside, bears in full control all morning. And another signal was losing the 20-period moving average support, as that had held the entire pre-market, and we lost it first thing right out of the gate. And there was another little bear flag right there. 20 minutes of pullback, little bear flag, 2 candlestick bounce, trying to hold the 20-period, 20-minute dump, bear flag, 25-minute dump. Then we had some bullish action towards the end of the day, getting tighter and tighter. Very clear that the bears were stepping in at the end of the day, rejecting from these 5-minute moving average resistances, and then once we started taking out these higher lows, it was very clear that the bears were back, as we could not even get over the exponential moving average resistances. We saw some increase in bear volume, and then there was a battle down at the low of the day at 213.10, 213.09, 213.08. Big time battle at those levels, and we're breaking below them now after hours due to the Amazon big miss and big drop on earnings. So we have a bearish lean. I have a bearish lean on the market short term, and we'll see if that plays out again tomorrow. I appreciate you watching. We'll check back in and wrap up the week. Have a wonderful night.